Welcome to ETF Market Insights, the ultimate destination for Canadian DIY investors eager for the latest on ETFs and the economy. Join us every week for timely insights and actionable strategies, all brought to you by BMO ETFs and our experienced panelists. Don't forget to subscribe, and let's jump right into today's episode.
Hello and welcome back to ETF Market Insights, and Happy New Year to all of our viewers. I hope you all enjoyed the holidays. I'm your host, Erin Allen with BMO ETFs. And in today's episode, we're going to take a look back at 2024, a year in review, and discuss the trends we saw in the market and look at which areas of the market were attracting investors' attention. And then we're going to look forward in 2025 and highlight some of the key trends that we're seeing in the ETF industry, and really the categories that we're expecting to gain traction as we head into 2025. Before we get started, just a quick reminder that we are not providing any investment advice or recommendations. As always, our goal here is education and information for Canadian do-it-yourself investors. Joining me today is Managing Director and Head of ETF Distribution at BMO ETFs, and my boss, Kevin Prince. Kevin really has his finger on the pulse when it comes to ETF investing. He manages both the DIY channel, the advisor channel, and he's always in contact with various industry participants. He's even written the Canadian Securities Institute course on the topic of the ETFs. So a great resource for us here today. Thanks again for joining me, Kevin.
Thanks for having me. I appreciate this.
We're kicking off, I think it's the 5th season of ETF Market Insights here, and Kevin was the pioneer who started this all, so it's great to have you back.
We're really trying to help meet the needs of the end investors. For
sure. Let's start off just by looking at the overall growth of the ETF industry in the past year. A record year for ETFs in terms of flows, $76 billion invested in ETFs over the years, bringing that total asset to a whopping $519 billion in Canadian listed ETFs. So Kevin, we've obviously discussed at length on this channel why ETFs are an effective tool for investors, but I'm hoping you can give us the rundown in terms of where you really see this growth coming from.
Happy to do that. I mean, first and foremost, BMO's been in the market since 2009, so we've had a good chance to see the evolution of the ETF industry over the time, and certainly can dive into some of the key trends. I mean, I think what we're really seeing in the marketplace is really helping build better portfolios, and we've been proud to be part of that since we got into the industry back in 2009. Now, bottom line, when you look at the growth of the ETF industry, what you're really seeing is that investors are understanding the benefits of ETFs more and more and more, as well as innovations coming into ETFs really help to build that better portfolios, as mentioned before. Now, when we look at flows, what do we see in the marketplace? There's really kind of 3 key targeted areas that really kind of generate those flows, that $76 billion you mentioned. First and foremost, the advisor industry. So advisors are utilizing ETFs as a good complement to portfolios, way to get exposure to the marketplace, maybe be a little more efficient too, for that matter. And that remains strong in the marketplace. We look over at the direct channel. Now, here's something that we're seeing people look at it become on par to the advisor industry in the growth in the marketplace there. And really, investors are looking at different ways of getting exposures, simplifying portfolios, or maybe even trying to be more precise in their exposures, or even diversifying away from individual stocks. So lots of trends driving the direct channel. And then one of the big key things that's coming to the marketplace is the institutional channel.
Right.
And that's been a big aspect of the marketplace, because you think about it, institutions are really coming in just like advisors and direct are coming in the marketplace to participate in ETFs. And they're looking at that kind of that liquidity aspect of it, and really how do they get exposures through tools like ETFs.
Yeah, I think the institutional and the direct channels are a huge part of that growth as people become more educated and more comfortable with the tool, and as more flexible options come to market. It's really building that growth. We also saw ETFs outsell mutual funds for the 3rd year in a row too, which is interesting. I'm not saying the money's coming from mutual funds into ETFs, but it's certainly something to consider there as well.
You hear that story a bit, and I actually want to, I think the big difference, of course, to factor in there too, is mutual funds, appeal to end investors. Well, because we have the institutional market too, there's a different kind of apples and oranges going on there when you look at that comparison.
That's fair. In 2024, the main story was the continued bull market of the broad U.S. markets. We really saw nothing stopping the S&P 500. But what other trends did we see that came through in the flows last year?
Oh, first, if you look at Canada marketplace, great year, and really showing the showcase of how Canadian marketplace is really coming into its age now, right? So over $500 billion now in ETF assets in Canada. Now that's certainly driven a little bit by market growth, but to your point, we saw that $76 billion in flows in ETFs. And frankly, that's up 46% over the best year ever. So we're seeing strong flows into the marketplace. Now, interesting, of that $76 billion, you're seeing some kind of the trends that are actually both north of the border and south of the border, in that the top, three providers gather roughly 2/3 of the portfolio of flows in the marketplace. And you saw that again, similar in the US, a little bit better in the US than 2/3, but generally the same ballpark where they're gathering it. And really what that is reflecting is the trust in the provider, the experience that somebody's probably got with that provider because they've been around for a bit longer, and then the range of solutions that they offer in the marketplace. We're certainly seeing that. Now in Canada, some background on flows, but some companies wise. Again, those top three providers, iShares around $18 billion. BMO ETFs coming in close to about $17.5 billion. And Vanguard coming in around $13.75 billion. So strong market industry, but really led by those three in the marketplace. In the States, interesting enough, staying with that, $10 trillion in ETF assets now. Like incredible. Really interesting. Don't forget the ETF industry started here in Canada all those years ago, and it's interesting to see it really morph and go around the world out there and take off. Now, iShares, Vanguard were kind of the dominant flows out there, each of them having over $300 billion in flows. So you can see when I say around 2/3, you're seeing those two, and then you see Invesco, and you're also seeing State Street in the top mixes too. And I think State Street, because of course there's spiders, ETFs in there, as well as NASDAQ for Invesco.
Great. And then in terms of categories, I know the broad market cap category really dominated. Are there other standout categories in terms of flows over the year?
First one, your broad market. Agreed. And I think really for good reason. Right? You think about the broad market, what does it get? It gets you that market capitalization approach, which is largest company, largest weight, I like to say. And that really represents what investors were looking for. They wanted that U.S. market exposure, and it's clearly what they wanted. Now, cascading beyond that, I'll highlight that investors are really staying with broad markets, right? Not just U.S. broad markets. We've seen Canadian broad markets pick up. We also saw international broad markets pick up too. So all of that is simply a way of people accessing the marketplace. We also see some trends too beyond the broad markets, maybe different factors and different weighting approaches relative to the broad markets.
Another notable mention is commodity ETFs, right? It was one of the biggest years for commodity ETFs, record year, all driven by gold. And BMO actually launched STARS at GLD last year now. And that was a big contributor there too. So that was an interesting trend, I thought.
Certainly seeing the trend again. I think it's kind of more of that broadening trend, and of course that exposures trend we talked about before. But yes, absolutely, commodities have been a key part of it. Beyond commodities, though, fixed income, big trend last year, right? Record flows into fixed income, up $24 billion. That's pretty impressive, right? Really, people broadening out in fixed income and diversifying through that. Also seeing a kind of a rotation in the kind of the shorter term part of the fixed income marketplace. A lot of people had previously kind of gravitated towards HIS ETFs, and that kind of rotated through into ultra short term and money market ETFs. Maybe we're looking at yield and different options in there. And then, of course, there's that growing trend for asset allocation ETFs, $11 billion in that space too. So again, up 39%. So that's a strong growth in that space, showing that people are looking at that core holding.
Asset allocation ETFs, I consider them a disruptor, even though they're sort of a plain vanilla, almost boring exposure. I do consider them a disruptor and a key trend in the marketplace. Talk to us a bit more about why we're seeing such great adoption of this tool.
Actually, I think what you're seeing now is the next evolution with inside asset allocation ETFs. People adopted them and saying, what else can we do with these? And I think what you're seeing now is they're really kind of meant for kind of more, people thought of as more small account solutions. And now you're thinking maybe more it's kind of a core holding and then use some Explorer onto it. So I think what you're really seeing is more uses for the product, and that's why it's expanding in its sales.
For sure. Let's look at fixed income a little bit deeper. We're coming off of sort of what I consider has been coined the big migration to cash that we saw started in 2023, continued into last year. But what did we see in terms of 2024? You mentioned the broadening out, but can you get a little bit deeper into what we saw there?
Yeah, you certainly saw people move into the broad market fixed income ETFs. And I think really what people are looking at there is they wanted to diversify their fixed income. For a while there, they're really going more short term. They wanted to broaden out and get access right across the yield curve and then also across the credit qualities of the broad market. So that effectively gives them more diversified exposure to interest rates and interest rate movements and the credit out there. And I'm talking about investment grade here when I'm saying broadening out. And then certainly, if you think on the short end of the yield curve, right? People are still pretty interested in the short end of the yield curve, primarily because that inverted part of the yield curve where you got the higher rate in the short term from the longer terms. Yes, interest rates coming down, but you're really seeing that more in the short term than you're seeing in other parts of the marketplace. And that drove people into things like our ultra short ETF or in our money markets ETF because of that rotation out of HIS, as we spoke about a second ago.
Yeah, the change of regulation that hit, I guess, at the beginning of 2024 really impacted rates on those HISA ETFs. We saw a lot of money going into ZMMK, our money market ETF. That was a big change for sure. What did we see in terms of new providers and new ETFs? I think we may have crossed 1,500 ETFs in Canada by now. I don't know if there've been some launches early this year. But
we're pretty close as of end of 2024 when I did the research on this. Absolutely close. But to your point, if we're not over very soon, we're going to be over very soon at 1,500 ETFs. And, you think about it, there was over 224 launches last year, so a significant number of choices coming into the marketplace. And I think you're going to see that again in 2025 where more and more choices come up. That 224 launches, that's up 12% from its previous record. So you're seeing continuous focus and commitment to the marketplace, which I think is kind of key, that ongoing commitment to development. Number of providers, up 5 providers last year. Previously, we kind of held flat or actually went down a little bit, but it's good to see the growth in the number of providers, again, showing the commitment to the overall marketplace.
Are those mostly U.S. providers coming to Canada and seeing the opportunity here?
Certainly, our market has been attractive. Let's be frank about that. Yes. But Canadian providers too, still being strong. But yes, U.S. providers.
Any themes in terms of new product launches that kind of stand out over the year?
Yeah, I took a little look at that. I mean, things you're looking at is kind of low volatility as a theme, quality. As aspects, income, of course, a key piece of themes that are coming out there. And then on markets like, Canada, of course, still a dominant aspect, U.S. and international. So some key things kind of, whenever you look at new ETFs out there, make sure you're doing your research, of course.
And National Bank does a great report on sort of the year-end overview, and we're going to include some of the images from those charts in our presentation today. But talk to us a bit about in terms of BMO ETF flows for 2024. Where did we really shine?
Just one quick step before we go to that, I do want to highlight in the U.S. marketplace, flows. Bitcoin was a big story down there.
Yes.
Really was a big story. And again, that's an access story because it wasn't really accessible in the marketplace in the States. Of course, we in Canada had access before that, but now they have access to it. So that was one of the big stories down there.
Big outflows from the Canadian listed ETFs into the US.
I think people kind of went, okay, I want to do that option versus this option to get that same exposure. So understandable.
Yeah, good point.
Sorry, I interrupted you on top flows of Canadian ETFs. Absolutely. We had a strong year this year. Number one, big focus for us, broad markets. So it's really represents some of the conversations we had initially, right? So broad markets, the ZAG, which is the BMO Aggregate Bond ETF, dominant flows in there. ZSP, S&P 500, strong flows into that. So that's the BMO S&P 500. ZMMK, which is our BMO Money Markets. Again, that short-term theme coming through. ZST, which is our BMO Ultra Short-Term. Again, that short-term rotation coming through. Interesting to also see corporate short-term bond ETF. So the BMO corporate short-term bond ETF, which is our ZCS. Again, that's that inverted yield curve. That shorter part of the yield curve was probably a little more attractive to people. A little higher yields in that space. And then last but not least, MSCI EFI, which is the developed markets. BMO MSCI EFI Index, ZEA. People looking really to diversify, get access to that international marketplace.
Now, one thing I noticed from the National Bank report that I mentioned to you before was that they did some research in terms of DIY channel flows versus advisor channel flows and what's really attracting the different, type of investor, if you will. And they pointed to covered call ETFs in the direct channel. So talk to us a little bit about that theme and that hunt for yield that we continue to see for DIY investors.
I think investors who, are probably managing their own investment portfolio could be somebody who has a little more time in their hands. And then effectively that could be somebody more in close to retirement or in retirement years. So I can clearly see that, yield being a key factor for somebody to look at, or cash flow for that matter, for them to look at when they are buying or trying to manage their incomes on an ongoing basis. And certainly covered calls, we were the initiator of launching covered calls here in Canada, have heavily kind of helped bridge that gap in income solutions for investors where they're trying to, how much money do I need to live on, or how much money do I want to earn on a regular basis, and I can bring a cover call in to enhance my yield or enhance my cash flow. Ultimately, that's been a key aspect that people have been looking for some time, specifically in cover call ETFs. Interesting though, when you look at that National Bank report, and hats off to those National Bank for the work they do, they're also looking at asset size too being a key factor too. So the more assets you have, or assets invested into cover calls, the more likely you're going to go to a little lower yielding products. And then frankly, if you have a little less investment in assets, you might be stretching for a yield in that space. And again, if you're looking at cover call ETFs, I'm going to highlight to everybody, do your own due diligence, please.
I was going to highlight that. So we're seeing a lot of investors being attracted to that sticker price, that yield, that distribution yield. And we've done multiple episodes. So just search covered calls on our YouTube channel. And we walk through all of the due diligence checks that you should be looking at before you invest in a covered call ETF. Final question, Kevin, would love to hear your projections for 2025, key trends you see that might continue or new trends potentially arising. Any thoughts around that?
Got a couple thoughts to share. I mean, first and foremost, I think you're going to hear, what am I hearing already in this year? I mean, you're hearing the discussion on broadening and defense as kind of two key things we're hearing, right? So defense, we've had 2 strong years in the U.S. market. Let's be frank about that. So people are thinking, well, maybe I need to put some defense on. And then, of course, broadening the marketplace, maybe getting more diversification out of the marketplace going forward. So we're certainly hearing those key trends. So things like forced diversification that comes through the 5% cap or our ZUQ, U.S. quality ETF, low volatility ETFs come into more of thought process. And things like more of the newer products like long short, where you get that lower volatility, you tend to get out of that space. And then last but not least, of course, buffer ETFs. Certainly seen some strong flows in the United States in buffer ETFs. I think that's going to become more of a factor going forward too here in Canada. And then I think asset allocations, going back to the discussion before, they will still maintain a strong trend as people continue to look at using them as that core and that explorer approach out there. And then one thing I do want to say is stay tuned. There's going to be more launches in 2025. The industry is committed to this and growing going forward. With a lot more launches, become a lot more choices. I think that's a good thing. Because, of course, you can build better portfolios and more precise portfolios for that matter. If you are building your own portfolios and take a look at that requires more due diligence. So tools. Keep, in fact, think about tools. And I'm so happy we launched our tools on our website to help people navigate through all the choices that are out there, like the comparison tool or the largest, most liquid tool, or even the stock replacement tool for that diversification we talked about.
For sure. I love how you mentioned stay tuned, because I think innovation is going to be a theme too. And just, giving all investors, DIY investors, access to different strategies, maybe more advanced strategies through ETFs is something that we're seeing a lot more of, even in the alternative space and that type of thing. So stay tuned for sure. Thank you so much for joining me today, Kevin. And I think we kicked off the new year with a great episode. I hope our viewers enjoyed it. Encourage everybody to comment below as we kick off this next season. Let us know what topics you'd like to hear from us on this year, and we'll do our best to cover them. Next week, we'll be back. My guest is none other than Larry Berman. He's widely recognized for his show on BNN, Berman's Call. And he's been a great educator in the ETF space over the past 3 or more decades. So I'm looking forward to getting his take on the markets next week. I hope you'll join us then. Bye for now.
Thank you for tuning in to this week's episode of ETF Market Insights. Don't forget to hit that subscribe button and sign up for alerts so you never miss our latest content. For more insights and to keep the conversation going, Visit us at etfmarketinsights.com. Join our mailing list and explore a wealth of resources and tools designed just for ETF investors. Until next time, stay informed and empowered in your investing journey. This session is for informational purposes only. Any reference to a particular company or product is for illustrative purposes only and should not be considered as investment advice or a recommendation to buy or sell. Particular investment and/or trading strategies should be evaluated relative to the individual's investment objectives, and professional advice should be obtained with respect to your unique circumstances.